same thing is happening over here, where people, when they say what will happen to ethanol if there are EVs, and what will happen to EVs if we have hydrogen vehicles. So there can be a coexistence of all the technologies at the similar time space, and we are seeing that there is incremental, you can say, you can say, adoption of ethanol blending also around the world. At the same time, the EVs are growing at a faster rate. At the same time, the future of hydrogen is also looking bright. But the thing that you need to understand is which kind of technology has already had its, you can say, disruption and now is scalable. So I would say the ethanol and the EV is scalable. The hydrogen is still getting scaled up. So you should always look at technologies which have gone through the disruption space and now are, having the runway to scale up, and they have a stable, you can say, technology now. While in hydrogen, we'll still see a lot of disruptions and then it will start to scale up. So I would say that both ethanol and EV are very interesting spaces, and we are seeing both in India specifically the focus of the government to blend ethanol, because see, if you look at the overall market, the addressable market for both is very high, because both are eating, not fighting with each other, but are eating the ICE engine fuel, right? So ethanol, for example, being blended with the fuel, so whatever cars are left, even if we say that the ICE engine cars would shrink from 100 to whatever 60 or 50 over a period of a decade or whatever, we will see that the blending of ethanol, which is just 7-8%, would go up, and hence it will still grow, because it has a larger market to address. At the same time, the EVs are growing at a very fast pace, because the overall addressable market for them was just 2 or 3% of the fleet, and they will capture maybe 30, 40, 50%. So the growth rates in EV can be far, far higher than ethanol. But ethanol also, because of the technology is so stable, a lot of opportunities which look good over there. So I'd say there'll be a coexistence, and though hydrogen is also very exciting, but you have to first understand the space properly, because the overall cost of hydrogen, till it doesn't go to $1, which is where the parity is, and currently it is around $4 to $5 per kg. So when it goes to $1 per kg, that is where the Reliance is also targeting, and that is where I guess the convergence would come around $1.5. And till the manufacturing cost doesn't go over there, there will be a lot of challenges to scale it up. But yes, it's an interesting space. And again, in all the other technology, as we say, that there are ancillary ways to play. Similarly, there are ancillary ways to play hydrogen also. The company, and again, we've discussed that these all companies we are using for example purpose. So just take it for that. Don't take it as a recommendation. But like a Linde India or an MTAR, which are working in this space, and they are classic ancillary plays to the sector. If we believe that hydrogen cylinders would be abundantly used in the coming future, then these are the companies which actually have worked. And MTAR, in fact, making hydrogen boxes for Bloom Energy in the US, and has in fact co-developing a lot of products for them, is something very exciting.